All right, I want to answer a real quick question. That it might be easier doing a real quick video for him or for. It was a question on rolling. Um, it's here, I believe. Um, Dan Liu asked, trying to understand the rolling position. Basically, he's saying if he had a stock at XYZ trading for $100 when he sold an iron condor, so he sold the 95 put and the 105 call. Then it moves to 104.5. Wouldn't I want to move the 105 call and the accompanying long call in step with it? Okay, right. This is a very common question. Now, there's two schools of thought here. Okay, it depends. Um, the Tasty Trade Way or Tom Sosnoff has this theory where duration over direction. So if there's time left, like more than 2 weeks, he'd rather stay in that position and leave the tested side because you have a it has a chance of going back down and rolling the untested side up to take the profit there and then collect even more money. So, for example, couple things. If you go to Tasty Trade here, go to Show Archives. Here's a great series, and it just wrapped up actually. If you scroll down to the where do I start with where is it here? Here we go. Where do I start season 2 with Tom and Case? And if you click over there, and I'll try to post these too, but there's a lot to post. But if you read, the last 2 weeks have been great. So look, it started with maybe 1 week, 2 weeks, last 2.5 weeks. Um, Here, starting from August 15th, from here on, it goes into strangles and what to do with strangles. And then August 21st, it goes into a call credit spread. And if you listen, there's like multiple choice questions. If the stock is here and your positions are here, what do you do? So Tom Sosnoff's way is leaving the tested side there because duration over direction. Because if you go to your if you go to Dole, okay, a good example. I don't know if I can show you on here, but let me. Okay, I'll go to my portfolio. Look at my TLT position. It's getting tested. Like, where the heck is it? Uh, Here we go. Look in the okay. Look. So if you look at my TLT position, I sold the 119 call. It has 21 days to go, right? Look where it is now. It's getting it's tested. It broke this, right? But remember, I collected some premium there, so I've got a little break even point. And I also sold the 115.50 put. Okay, but I got tested on this week. So if I go to my original position is I don't know if I can show you here. Let me go to activity. Okay, history. Okay, look right here. Yeah, see TLT. Look, what I did was on a few days ago. What I did was I bought the. Okay, here. 105. So about 112. Okay, here. All right. So what I did was look on the 28th, like yesterday, I think it was. What I did was remember my put side. Look, I had the 112 put on, right? And it's not 119. So it's my call side was getting tested. So what I did was I closed this half of the leg. So I bought back my 112 put to close it, and then I rolled it. And all a roll means is you're closing one and you're opening another one. You're just doing it in one trade. So in one trade, I closed out my put spread side of the Golden Gecko. So I bought back my 112 and I sold my 105 to close that side. And then I resold over here the 115.5, right? This put spread. So I collected, I collected some money there, right? The difference between here and here is how much I collected in credit. Okay. And at the time, the thing was trading at 119.31 or something like that. So that's what I did. I rolled up the untested side to collect more money, take my profits, and even collect more money to lower my cost basis and lower the probability of me making money. Okay, so let me show you what happened. I'll put in TLT here, and I'll show you the chart here. If I click on this, I think I can expand this. Where's the expand button? Here we go. And I'll go 1 day. See, it got as high as 119.31 or something like that. Okay, and then the reason why I didn't move my call is when you sell any type of strangle, there's a thing called probability of touch. There's probability of in the money or probability of out of the money, but there's a probability of a touch. So I knew that when I sold it, it had a pretty good chance of touching one of the sides, if not both sides, by the time between the time I place a trade and any time before expiration. Okay, so I know that my break even is a little bit higher than 119 because I collected premium, right? So that's why I just rolled up the put side and left the call side where it was. Okay, so let me where the heck? Oh, here it is, collapse. Okay, and I'll click this and it'll go away. Okay, so here's what I mean by probability of touch. If I choose a strategy here, and let's do another golden gecko here just for fun. Okay, so hit go. I don't know if this is gonna show, but probably a profit. It doesn't show me the probability of touch. Extrinsic, total return on capital. Probably a profit. Trading, the position, portfolio, trading. Buying power, probably, no, it doesn't show. Okay, here's what I mean by probability of touch. Let me go to, oh crap. If you go to Thinkorswim, you can actually change one of the columns and it'll show you the probability of touch. Okay, but usually when you place a golden gecko, you have a at least a 75% chance that it'll touch one of the sides. Okay, between the time you place a trade and expiration. I'm not saying it's, so it may touch one of the sides. So that's how you handle. No, another the rolling. Now here's what I mean about why not, what the problems you have in like my call side is getting tested. Why not just move the call side? All right. Well, here's why. Look, I'll go to my positions right here, my portfolio, right, and look at my TLT. Okay, here it is. Now here's my call side. My 119 is getting tested, right? Because it's at 119.13. Yeah, but I collected 42 cents. You know what I mean? On one side. So I collected 42 cents and I had to buy it for 12 cents. So 30 cents. So $19.30 is my break even roughly. Look, what if I want to roll this? If I want to roll the tested side, which is the call side, look what happens. I roll it. Okay. Here's the rolling date. Here's my current date, and here's my possible roll date. I could roll it out to the 26 weekly, which is 28 days from now instead of 21, right? And look, how much can I collect? I gotta spend 46 cents. So you never want to roll. If you're gonna roll something, you never want to pay for it, okay? Because then you're throwing good, bad after money. If you're gonna roll anything, you want to get paid to roll. Okay, so you want to do it as a scratch or at least collect some premium, right? Now look, if I roll, I can't collect any money. See that? See down here? It's a debit. Debit means you have to pay. I'm not gonna pay to roll. Right now I'm still on the dance floor, as they say, so I still got a chance for it to go down and still make my money. Alright, now look, what if I extend my expiration? See this? Click this. Now I'm 35 days out. I still gotta pay. You see what I mean? I still have to pay to play. I don't want to do that. So let's try again. Look, now we're 42 days out, right? And even if I move even if I roll over here, I still got to pay 37 cents. I'm not happy. That's not happening. I don't want to pay. If I roll out 49 days, look, I still got to pay 26 cents. If I go even further, 84 days, okay, finally, but then I'm rolling out for another 84 days for a credit. I might consider this in about a week from now, but not right now. Okay, so that's the explanation. Now there's another school of thought. Okay, Karen, the super trader, this is the other benefit of just trading one stock or one type of position. She does everything in the SPY or the SPX. Well, what she does is if her probability drops to, let's say, 70% and she's got a lot of time left, she doesn't wait. She just rolls it ahead of time. So for example, here the SPY is at 200, right? And let's say she has this put on. So I'll just do a naked put. So I'll do an option, a short put, and this is my default, so go. Okay, so click on leg. You see how this has an 80s, let's say she sold this, there's 49 days left to go. She has right now an 87% probability of this finishing out of the money, so she makes money, right? Okay, so let's fast forward. What if the stock drops? So to mimic the stock dropping, right, I'm going to move this put up like this a little bit. So let's say the stock dropping, he's getting closer to this probability of out of the money. Okay, so technically the position is going against her, but she doesn't wait for it to do this, right? She doesn't wait for it to go in the money. Okay, she doesn't wait for it to go in the money like this, where it says in the money. She doesn't wait. Let me see. One more strike over. If I move this one click there, she doesn't wait for this to happen. If the stock is moving against her, once she gets to around 70, once it gets to around 70% out of the money, or they call it 30% delta because it'll be 30% in the money. Okay, what she'll do is she'll close it already. She'll close this position and she'll look at how much she lost, right, between the time she put on the trade and this. And then she'll sell again, or she'll roll. She'll sell another position here back to around 80%. She'll move back to 80 to 84%. And then she'll double down. Like she'll sell, you know, instead of selling one contract, she might sell two. Why? Because she's collecting premium and she wants to collect more, enough to make up for the money she lost. That if there was any losing, you know, if she lost a little money from here, she'll sell two of these or whatever to make up more, and then maybe sell another call. Maybe she'll sell another call. What did I, around here, right? Is that, no, 49 days, my bad. Double click. See here, I screwed up. I want to make this match days so you can just 49 days. So 49 days is about here. Okay. Okay, so now they match. See, 49 days. Anyway, so then she might go, okay, maybe I lost some money here, so I moved it out. I'm going to sell two of these to make up the money, and then at the same time, maybe I'll sell some calls to make up the difference, right? So she's net break even. So she adjusts her position before she gets in trouble. Okay, so there's two ways of thought on how to handle rolling. I hope this helps. If you have any other questions, just hit me up, do a shout out box, or let me know. Thanks.